On this Jobs Report Day, let's bring in Nick Santiago. He's the CEO of In the Money Stocks. Nick, traders are closely watching the shuffling around in the stock market as the 10-year and 2-year yields on those bonds remain abnormally high. What can you tell us?
Well, I'm trying to be a little bit cautious here. There are a lot of stocks, though, that are giving buy signals. So that's a positive. The negative is that the market is throwing a tantrum right now, and we could still be in for some more downside action. So you have to be careful. You have to pick your spots here. You don't want to overextend yourself. Even if you have a really good level on a particular company that looks good at the time, it could still get dragged down because the sentiment is so bad right now. You have a lot of fear out here. The volatility index has moved higher. And everybody, as you said earlier, is watching the twos and tens right now. And until that really pulls back, and more importantly, I think the 2-year Treasury note yield starts to move lower. The market is going to remain in a very hostile environment in the near future.
As you're watching the 10 and 2-year, what do you see that could be ahead for the stock market? Say a rally or a stock market sell-off?
Yeah, the market wants to see that 2-year yield go lower. Even the 10-year has, exploded higher as well. So we want to see both of them. But there's an inverted yield curve between 2s and 10s. So here's the positive note. If the inverted yield curve were to no longer be inverted, that would cause potentially a rally in the market. So that's a positive here because the spread between 2s and 10s is now getting much, much tighter. And if we were to see the 10-year yield go above the 2-year yield, I think that would cause a rally that would definitely help out the financials. So I'm watching the KRE very closely. That's the regional bank ETF. That gives us a lot of clues on an intraday basis. But I do think if that can get defended and start to move higher, that probably tells you that these markets are getting ready to stage a significant bounce. Now, the negative side is if yields on the 2-year start to climb more into the 5.25% to 5.5% level where the Fed funds rate is, that's a big problem and a big no-no. The markets will not like it and stocks will go lower.
Interesting times in the market. Thank you, Nick.
Thank you, Ange.
Go to businessfirstam.com for where to see our show on TV.